This video will be how I plan to invest for 2024. Recently, huge names like JP Morgan and Goldman Sachs put out interesting information of exactly how to invest in 2024 because this next year is going to be a crazy one with a lot of big things happening that you may not even know about, but I'm going to clue you in. Because you don't get rich after everyone else knows about things. You get rich in investing before they know. There's some really big things coming and we need to prepare, especially right now at the end of 2023 and at the beginning of 2024. Before I go there, I want to take a second and thank you. I've been on this YouTube journey for about 2 years, and when I started, my goal was to hopefully get 1,000 subscribers. I knew when I started, I couldn't actually control how many subscribers that I got, but I could control my consistency and my work ethic. My only real goal that I held myself to when I started was that I was going to make one video every week for 52 weeks no matter what. And with every video, I would progress 1% and make each one better than the last one so that I could bring the best value to you. I thought that if I could make good content that was well researched and simple or easy to understand, that you would definitely appreciate that. Like I said, after about a year, I had about 1,000 subscribers, and that was amazing to me. But last year, at about this time, I had about 5,000 subscribers, and I made a video with this hope. For YouTube in 2023, I have a goal to get to 100,000 subscribers, and I know that sounds crazy. The goal when I started this channel was to help. It was to extend the reach outside of the classroom, and it was to help teach what I know that schools should be teaching, but they're just not. So again, at that time, about 1 year ago, I had about 5,000 subscribers, and so saying that I was going to get 100,000 was absolutely crazy to me. So I just kept controlling what I could control, and I made videos that I wish that I had when I was starting with my investing career. Well, it's been about a year since that video, and just this week I hit the craziest number of subscribers I could ever fathom. I hit 100,000 subscribers. So from the bottom of my heart, thank you so much for tuning in, and especially thank you to my biggest supporter daily, my beautiful girlfriend Camille, who surprised me with this celebration when I got into my office today, which made me smile so big. And to you guys, thank you for making this community one of the best that I've seen on YouTube total. I truly believe you guys are amazing, and whenever you comment helpful things in the comment section, you help new investors to further their research, and I truly believe we're all making a difference. With that in mind, as we are entering a new year, please comment down below your one big goal for 2024. It doesn't need to be money related, but it would just be awesome to have a cool little library of goals down below so we can all encourage one another. A bonus that I'd ask is that you not only comment your goal, but that you comment on somebody else's goal and give them some encouragement. You guys are awesome. I'm Nolan Govea, my students call me Professor G, and I made this channel to make investing simplified. Okay, back to the video. So a couple days ago, a very powerful article was written in Business Insider, and a lot of this info has already been circling the financial world in various ways. Here's exactly how to invest in 2024 as stocks in the economy remain strong, according to the leading strategists at Goldman Sachs, JP Morgan, and 10 other top Wall Street firms. BMO predicts a 10.8% gain in the S&P 500. Bank of America predicts an 8.6% gain in the S&P 500. RBC also predicts an 8.6% gain in the S&P 500. Some big names have much less bullish opinions though. Goldman Sachs predicts only a 2.1% gain, and Wells Fargo says the S&P 500 will only gain 0.5% in 2024. Many of these firms agree that consumers, which are widely seen as the backbone of the US economy, will cut back on spending in 2024. Less spending will then translate to slower economic growth. They do also emphasize that this isn't necessarily a bad thing though. Less spending should bring down inflation and rates. Both factors historically have helped spark an economic recovery, which we expect to materialize once the slowdown is behind us. That being said though, for 2024, both JP Morgan and Stanley Morgan both predict a loss in the S&P 500, where Morgan Stanley thinks there will be a 2.3% loss, and JP Morgan thinks there's going to be an 8.8% loss. While I don't think we're going to see as bearish of an outlook as these two see, I do like their advice in how to invest just in case. If the next year is negative for stocks, the economy, or both, we can play defense by investing in high-quality companies in cheap, downturn-resistant sectors like utilities and healthcare. While energy stocks are economically sensitive, they also appear to be a strong bet since they're inexpensive and a hedge against geopolitical risks. So what in the world do we do with all this information? First thing we do is we listen to it. Hear what they're saying, understand where they're coming from, but take each one lightly. Our human brains like to bias towards something that we want to hear. So something positive usually in investing is what we're going to gravitate towards, or the news we're more likely to hopefully pull from. We're going to hate those bear case predictions, but we need to be wise. To reiterate and summarize what this article actually said, the consensus among 12 large investment firms is that stocks will rise again in 2024. Also, however, slowing economic growth and rising geopolitical tensions could cause a recession. What? This seems like they're saying the very opposite things and just packaging it up like, yep, that's what the information is. And guess what? These firms and these experts are doing their absolute best, and still at the end of the day, they have no idea what's actually going to happen. So let's take both cases and scenarios. If you were to dollar cost average right now and through all of 2024, and the first case were to happen and stocks were gonna rise all throughout 2024, you'll just make a bunch of profit and a bunch of money because you started investing now and throughout while it was rising. The S&P 500 is at $4,610 today, so if it hits what BMO says and it hits $5,100, you'll have made some solid profit. If you were to continue dollar cost averaging today and through 2024, and then that second option happens and stocks or the S&P 500 were to drop some, you will have had some solid money invested into the market, and you'll be taking advantage of some solid deals because you'll be getting that S&P 500 and good stocks at lower prices. If the S&P 500 drops to $4,200 like JP Morgan predicts, then you'll get to buy shares for cheap and invest when the smartest and wisest investors say to invest, which is at the bottom. Short term, it's going to be tough to watch your investment drop and to watch that whole portfolio take a little bit of a dive. But long term, a market drop is always the best time to have invested your money. Any of you that have invested for any period of time and those prices start to get high, you definitely say to yourself that you wish that you would have bought more when the prices were low. And so if that market drops in 2024, that's going to be your chance. So it looks like either way, the dollar cost average strategy and to continue to invest seems like the right play. Just continuing to invest every 2 weeks or every month, no matter what the cost is or no matter what the price is on these good ETFs that have low fees and are very diversified, still seems to be the move. I'll be doing this exactly now and through 2024. If there's ever a time where I think it makes sense to dump even more money than a regular dollar cost average in, I'll definitely jump on and make a video and clue you guys in right away. And if I think that we're going to see a steep drop in the market where it makes actual sense to take some funds out of the market and just hold off and wait till it actually hits a little bit more of a bottom to buy back in, I'll definitely update you on what I'm doing with that situation as well. My 3-fund portfolio is exactly the best way to be investing, just like this, for long-term mega profits. So watch this video to learn more about that 3-fund portfolio and how much to invest based on your age. Thanks again, and I'll see you on the next one.